Hi, I'm Lindsay Roberts, and I'm joined by Mark Dooley, Global Head of Macquarie's Green Investment Group.
Hi, Lindsay.
Hi, Mark. So it's been another action-packed year for the Green Investment Group, and you've set that all out in your progress report published today and available on GIG's website. What's been your highlight over the past 12 months?
It's been a really strong year for us. And I think the key word is volume. In a year where we've all had to deal with the pandemic, our global development pipeline has risen above 30 gigawatts. To put that in context, on the coldest day in winter, UK's peak demand is 50 gigawatts. So it's a pretty significant volume that we've got out there. Now that's happening in old markets and new markets like India, the Philippines, France. And it's happening across a range of technologies, particularly the established technologies. So offshore wind, we've had success in UK's round 4 with a 1.5 gigawatt seabed lease award to ourselves and our partners, Total Energies. Our very significant Korean offshore wind development portfolio has pushed forward very strongly during the year. And we're at work on expanding that portfolio even further in bidding in France, in Norway and in Scotland. So a lot going on in offshore wind. In solar, which of course is all about volume, we've now got 25 gigawatts in development. And that's happening across Europe with Zero Generation, in Asia with Blue Leaf, and in the US with Savion Energy. So a lot of volume there. And then expanding and with a really significant body of new platforms that have come on stream. Calibrant Energy, our energy as a service joint venture with Siemens in the US. Capbal, our utility scale storage venture in the UK. Heliox, our fleet charging venture in Europe. And in India, we've got Vibrant Energy, which is a C&I solar business. So a proliferation. And all of those about building volume. And volume is important because when you think about our mission to accelerate the green transition, volume is a key part of what we have to deliver.
And on volume, you've mentioned a lot of the platforms and partnerships that you've created over the year. That seems like a very deliberate strategy. Is it? And can you tell me a little bit about the rationale behind it?
It is a very deliberate strategy that we've been pursuing for a couple of years now. And it really is about two underlying themes. First, the volume that we've talked about, but maybe more importantly, and the trigger for it is delivering renewables projects is an inherently industrial activity. There are some investment banking skills required, but fundamentally developing, building, commercialising, operating these assets is an industrial activity. And we need to set that up to occur in organisations that are best tuned to delivering that. And we've found that by either creating or partnering with others to create dedicated companies that deliver these industrial activities, we do the best job. We allow ourselves to achieve the greatest volume. And if we can fuel all that capability with the capital that we can bring, then we set ourselves up for really escalating volumes. And what we find then is that we've created real engines for growth, for volume into the future. And that theme is there in the story that we've just told, and there's a lot more to follow.
And you've spoken about how that strategy of platforms and partnerships has really delivered volume in established technologies like offshore wind and particularly solar as well. Do you think it's a model that also works for newer technologies?
Well, new technologies require nimbleness, a bespoke response, and above all, they require a push to launch them and make them into, ultimately, we hope, mainstream technologies. Now, sometimes that support will be in the form of supporting a new company, a new platform. Other times, it will be more specific to a given asset where a particular effort is required in order to make a pilot project happen. We see it as a critical part of our role to be across all of those exposures to new technology. We see the lessons, the great demonstration we had in last decade that new technologies, if supported in that way, will become mainstream, will win the support of the wider investor community, and will become really unconstrained in terms of the capital available to make them happen. And of course, offshore wind was the great example of that. And through this decade, we will see that happen multiple times. Hydrogen's got a massive role to play, but will need that push, does need that push, and we're at work on that. Battery storage, perhaps more progressed, but again, it requires people with real intent and a strategic outlook to get behind that, and we're positioned for that. And then carbon capture, underwhelmed a little bit last decade, but we see it as having a really strong positioning at the moment, particularly with the support of the large oil and gas companies who have a particular offering to make with their ensemble of skills in understanding how to sequester carbon, and their particular agenda in wanting to demonstrate that they can neutralise the carbon impacts of maybe some of their legacy conventional activities. And it goes on. Renewable fuels, sustainable aircraft fuels, all of these are things that will need a push this decade, but we have a high degree of confidence will move into being mainstream, widely supported by capital activities.
Now, GIG also made a net zero commitment this year, and we've seen a flurry of net zero commitments being made across the private sector as we head into COP26. Some people might be surprised that GIG made that commitment given the mission that you touched on earlier. GIG only invests in projects designed to accelerate the green transition. So why did you feel the need to make that commitment? And can you talk to us a little bit about what that commitment entails?
The commitment we've made to start off with 2025, our own direct operations will be net zero. 2030, our financed renewable energy projects will be net zero. And then 2050, we've set a further target for assets that might start out as high carbon projects, but where we want to intervene, we want to drive the industrial transition. And I guess the surprise you're talking about is, well, for the renewable energy projects, aren't they inherently net zero? The truth is, we do not get to take credit for the avoided emissions produced by renewable energy projects. We do not get to take credit for that. Instead, we've got to take the effort of mitigating the carbon footprint they do have in the materials that they use in the fabrication, in the transport that's required to put these projects together. Now, that is something that we're conscientiously setting ourselves on the path to do. We've given ourselves until 2030. We have got a raft of strategies to do that, but it will take time to do. We're also very excited, though, about the industrial transition mandate, I guess, we've preserved for ourselves by keeping the 2050 target. We really see a big role for GIG to do the hard work of the industrial transition, to get involved in the high carbon producing industrial activities out there at the moment, and be a change agent in producing net zero modes of activity for those same businesses.
So a big few years ahead of us of really big ambitions there and a lot of work to do. Over the next 12 months, what do you think are going to be the big changes we've seen? You've talked about our move to volume. You've talked about the new technologies. What else do you see afoot in the marketplace?
When I spoke this time last year, I talked with great satisfaction about the change there has been in our community, and particularly our business community. Companies are now aware, motivated, feeling accountable, feeling a sense of urgency to respond to the climate crisis. And they're feeling this because they're seeing it of their own resources, but also they're hearing it from their consumers, their shareholders, and the community in general. And that has not gone away over the last year. In fact, it's built, and we see that growing month by month, year by year, as this decade goes on. And what this does is create an appetite for the products that GIG brings, the solutions that GIG brings, to enable these companies to respond to that sense of urgency we have. And that's a fantastic thing. That means that increasingly the whole community, including the business community, is pulling together in facing this climate challenge.
Fantastic. Mark, thank you so much for joining us today.
Thanks, Lizzie.